Welcome back to the Daily Crypto Deep Dive. Bitcoin has just given the market one of those moments where everyone suddenly stops pretending they are calm. We have had Bitcoin falling below $60,000. We have had a wick down toward the $58,000 area. We have had Ethereum, XRP, Solana, and Dogecoin dragged lower with it. And we have had almost $1.5 billion in crypto liquidations in roughly 24 hours. And that is the part that matters. This was not just a normal red candle. This was not just Bitcoin drifting lower because traders got bored. This was forced selling. This was leverage getting wiped out. This was overconfident long positions being flushed. This was the market saying, "You thought the bottom was already in? Let's test that conviction." So today, the question is simple. Was this the start of something much worse? Or was this the kind of brutal liquidation event that often appears right before Bitcoin catches a violent relief bounce? Because right now, both sides actually have a case. And that is what makes this moment so interesting. Let's start with what happened. Bitcoin broke below the $60,000 level and dropped toward the $58,000 zone. That matters because $60,000 is not just a number on a chart. It is a psychological level. It is a round number. It is where retail traders start panicking, where leveraged longs start getting liquidated, and where headlines suddenly change from Bitcoin dip to Bitcoin crash alert. At the same time, the broader crypto market followed. Ethereum dropped hard. XRP slipped again. Solana weakened. Dogecoin lost momentum, and the total crypto market cap moved lower as fear spread across the entire market. But the real damage came from liquidations. According to market data, more than 217,000 traders were liquidated in the last 24 hours, with total crypto liquidations near $1.48 billion. Long traders took the worst of it, with roughly $1.21 billion in long positions wiped out. Bitcoin alone saw around $665 million in liquidations. Ethereum saw around $359 million, and XRP saw more than $50 million. That tells us something very important. This was not just sellers selling. This was the market forcing people out. And when forced selling happens, it can exaggerate the move. It creates a cascade. Bitcoin falls, leveraged longs get liquidated. Those liquidations create more sell pressure. That sell pressure pushes Bitcoin lower, and then more longs are liquidated again. That is how a normal sell-off turns into a liquidation wave. Now, the scary part is that this did not happen in isolation. It came at a time when macro pressure is already building. Fresh US inflation data has reinforced the idea that interest rates may stay higher for longer. And for crypto, that is a problem. Bitcoin thrives when liquidity is expanding, when investors are hungry for risk, and when money is cheap. But when inflation stays sticky and the market starts worrying about higher rates, risk assets struggle. Crypto is still treated like a risk asset by most major investors. So when the bond market, inflation data, and Federal Reserve expectations start flashing warning signs, Bitcoin does not get to ignore that. That is why this move matters. It was not just a technical breakdown. It was a technical breakdown landing right on top of macro fear. And then you have the options market. There is a huge Bitcoin options expiry coming, worth around $9.33 billion, with a large amount of open interest still sitting far above the current Bitcoin price. That means a lot of traders had been positioned for a much stronger market than the one we are actually seeing right now. When Bitcoin is trading far below major call strike zones, options dealers and traders can be forced to adjust hedges. That can create choppy, violent price action into expiry. So if Bitcoin feels unstable right now, that is because it is. You have spot selling. You have liquidation pressure. You have macro fear. You have ETF outflows. You have options expiry. You have strategy and Bitcoin treasury stocks under pressure. And you have traders suddenly realizing that the bull market script is not playing out cleanly. But here is where the episode gets interesting. Because despite all of that fear, this may not be a simple bearish story. CoinDesk has flagged that even after Bitcoin hit a new multi-year low around the $58,000 area, derivatives and order book data showed crowded short positioning and stronger buy orders below the market. In plain English, That means a lot of traders are now leaning aggressively bearish, while buyers may be waiting underneath. And that is exactly the kind of setup where a short squeeze can happen. A short squeeze is when too many traders bet against the market, the price starts moving up, and those short traders are forced to close their positions. Closing shorts means buying back Bitcoin, and that buying can push the price even higher. So the same market that just destroyed over-leveraged longs could turn around and punish overconfident shorts next. That is why you have to be careful getting too emotional after a move like this. The crowd was too bullish before the drop. Now the crowd may be getting too bearish after the drop. And Bitcoin has a habit of punishing whichever side gets too comfortable. Now let's bring in the analysts, because the split right now is fascinating. Don Crypto Trades has said that the green support zone on his Bitcoin chart is an area where he would gradually accumulate long-term spot Bitcoin, rather than trying to perfectly call the bottom. His point is important. He is not saying Bitcoin cannot go lower. He is saying that for long-term investors, the $60,000 region starts to become an area where you think in terms of accumulation, not panic. That is the investor mindset. You do not need the exact bottom. You need zones where the long-term risk-reward starts improving. But then you have Chris Sullivan from Hyperion Decimus giving a much more dramatic framework. According to CoinDesk, his firm is tracking 4 rare on-chain indicators that have aligned only a handful of times in Bitcoin's history. Historically, similar signals have appeared near market bottoms. But Sullivan's view is not simply, Bitcoin is bottomed, buy everything now. His view is more precise. He says Bitcoin may need to either break above the key $82,000 pivot to confirm a major turn, or it may still need one final capitulation move, potentially toward the $54,000 to $57,000 region, or even a wick as low as $48,000 before the next real uptrend can be confirmed. That is a brilliant framework for listeners because it gives us 2 clean paths. Path 1. Bitcoin reclaims strength and pushes back toward the $82,000 area. That would suggest this was a bear trap and the market has absorbed the worst of the selling. Path 2. Bitcoin fails to reclaim strength. Liquidity stays weak, and we get one more ugly capitulation event toward the high $40,000 or low $50,000. And then you have even more bearish voices. Prominent Bitcoin miner Jiang Zhuer has reportedly warned that Bitcoin could fall another 30% toward the $42,000 to $44,000 region by year-end. His argument is linked partly to Strategy's market value compared with its Bitcoin holdings, and the idea that Bitcoin may not bottom immediately even after major stress signals appear. So this is not a market where everyone is secretly bullish. Some analysts think this is a bottoming zone. Some think this is a final shakeout. Some think there is still another major leg lower coming. And that is why the next few weeks matter so much. Now let's talk about the emotional side of this market, because this is where retail usually gets destroyed. When Bitcoin was higher, people were chasing upside. They were talking about new highs. They were levering long. They were assuming every dip would bounce. Then Bitcoin breaks $60,000, and suddenly those same people start talking about $40,000, $30,000, bear markets, crypto winter, and it's over. That is the trap. Markets do not usually move from euphoria to despair in a straight line. They move in violent waves. They create fake breakdowns. They create fake bounces. They destroy late longs, then they destroy late shorts. And somewhere inside all that chaos, the real investors are quietly building positions while everyone else is reacting emotionally. That does not mean you blindly buy every dip. It means you stop treating every red candle like the end of crypto. Because Bitcoin has been here before. Bitcoin has had brutal drawdowns before. Bitcoin has had liquidation waves before. Bitcoin has had macro fear before. Bitcoin has had ETF outflows before. Bitcoin has had people saying the cycle is broken before. The question is not whether Bitcoin can survive fear. It has already proven it can. The question is whether this specific market has enough liquidity, enough institutional demand, and enough spot buyer strength to reverse before the next major breakdown. Right now, we do not have full confirmation. And that is the honest answer. For traders, this is dangerous. The market is volatile. The options expiry can create sharp moves, and both longs and shorts can get punished quickly. For long-term investors, this is more interesting. Bitcoin in the $58,000 to $60,000 zone is where serious people start looking at risk-reward again. Not because the bottom is guaranteed, but because panic is usually when better opportunities begin to appear. For altcoins, though, I would be much more careful. If Bitcoin is unstable, altcoins are vulnerable. Ethereum, Solana, XRP, Dogecoin, Cardano, all of them can bounce hard if Bitcoin squeezes upward, but they can also get hit harder if Bitcoin loses support again. So the smart approach is not to pretend everything is fine. The smart approach is to separate Bitcoin from the rest of the market. Bitcoin may be entering a long-term accumulation zone. Altcoins may still need Bitcoin to prove stability first. Now, before we go further, this is not financial advice. But if you are trading crypto and you want to support the show, the Kraken link is in the description. We are giving away 20 XRP to listeners who sign up through the Kraken link. And honestly, that support is one of the ways we keep building crypto news today every single day. Use proper risk management, only trade what you can afford to risk, and make sure you understand what you are doing before putting money into any market. Now back to the big question. Is this a liquidation wave or a bear trap? My verdict is this. It is both for now. It was absolutely a liquidation wave. The numbers prove that. Over $1 billion in longs getting wiped out is not normal selling pressure. That is leverage being destroyed. But it also has the ingredients of a bear trap because sentiment has flipped so violently bearish, shorts are building, and buy orders appear to be sitting below the market. The danger is that people will pick one side too early. The bulls will say, that was definitely the bottom. The bears will say, this is definitely going to $40,000. The truth is, we need confirmation. If Bitcoin can reclaim the $60,000 area properly, then push back through the low to mid $60,000, the short squeeze argument gets stronger. If Bitcoin starts holding higher lows and ETF outflows slow down and macro fear calms, then this could become the bear trap that sets up a relief rally. But if Bitcoin loses the $58,000 area again, fails to bounce, and macro pressure keeps building, then Chris Sullivan's lower target zone around $54,000 to $57,000 becomes very realistic. And if that breaks badly, the $48,000 capitulation wick becomes the nightmare scenario traders will start pricing in. So tomorrow's market is not about hope. It is about levels. Bitcoin needs to prove that $58,000 was a flush, not the start of a new leg lower. And until it proves that, the market deserves respect. But here is the hopeful part. Real bottoms rarely feel good. They do not arrive with everyone calm, confident, and ready. They arrive when liquidations are ugly, headlines are scary, influencers go quiet, and ordinary investors start wondering if they made a mistake. That does not guarantee this is the bottom. But it does mean the market is finally reaching the kind of fear zone where major turns can begin. So no, I would not panic here. But I also would not get reckless. This is a market for patience, cash discipline, and selective conviction. Bitcoin has entered the danger zone, but it may also have entered the opportunity zone. And the next move will tell us whether this was the crash before the comeback or just the first warning shot of a deeper reset. Drop your thoughts in the comments. Do you think Bitcoin has just put in a bear trap, or are we heading for one final capitulation toward $48,000? Smash like, follow the show, check the Kraken link in the description if you want to support crypto news today, and as always, we will see you at the top.